All right, so we're just gonna hop right into it because we still don't have a new intro.
Well, absolutely, but guys, I want to talk about money. I want to
Wait,
talk about cash.
but
We haven't
Joey,
introduced ourselves.
we
Oh,
are
okay, we can do that
engineering
We are
first.
money.
engineering money, Joey. This is the podcast.
That's Oh,
This is a
okay.
Where some
podcast,
We're
full-time
Joey. Yeah.
engineers give their 2 cents on the financial news of the week. But Ben never, he always forgets to mention this. We're just trying to
I say
survive
this
because we're
every
learning this
week.
as we
He
go.
says it
I say
every
it every
time.
single week.
It's just always
Whatever.
secondary to the 2 cents
Let's just
piece.
hop into it. People that are listening know us by now.
Yeah.
That's a good point. But guys, today I bought donuts for breakfast, and they were delicious.
Where from?
I It was from Valley
Are they
Pastries. They're
publicly
5 minutes
traded?
from my house. Unfortunately, no, because I mean they'd be going to the moon.
Mm,
These guys, it's 7 degrees outside. Last week it was minus 20, but you
Yeah.
still get a line out the door, people lining up for hot, fresh donuts, and it was worth it.
Wow.
Let me tell you. I bought $6 worth of donuts, and I had a $10 bill in my wallet, so I just gave it to them and I let them keep the change. And I
what a
realized
benevolent
that's a
gesture.
relatively it was a relatively big tip for a $6 thing of donuts, but it didn't feel like anything to me. Cash doesn't feel like real money. It's like if
Okay,
it's
Mr. Moneybags.
no, it's only cash. Like if I paid that with a credit card, I'd be like, tip. No, you just gave me a donut. But when it's cash, it's like it flows so freely.
I guess that's a good point because when I'm using when I have money in my checking account, it feels different than when I if I had that same amount of money in my wallet.
Exactly. Like you see the number on the screen when it's in your checking account, but it's just paper in your hands when it's
No
cash.
different from kindling.
It's
No
so
different. Yeah.
easy to spend.
Okay,
But
what's your point, Joey?
my point with
Oh,
that was
wait. My
what?
tax return was
Good
accepted.
job.
Ooh, nice.
Heck yeah. Okay, go ahead, Joey.
My point with that background story was to bring up the point that I'm going to talk about cryptocurrency today
Nice.
because because that's a type of currency different than your cash. And right now, not a lot of people feel that way about it, where it's like, I don't know, currency. It's an investment. But
Yeah.
I was reading into the different types of cryptocurrency there are out there, and there's like so many. It's stupid. But Bitcoin is the one everyone's heard about, right?
Mm-hmm.
That one feels like I wouldn't want my currency to only be Bitcoin because it's too volatile.
Yeah. It yeah, your currency shouldn't change like 20% in a week.
Exactly.
Makes it so hard to
Exactly.
use.
But I do like it as an investment, specifically because it's been going up recently. So it's been nice. But and Ben, didn't you just this week decide that you were in on
I did
cryptocurrency?
for the very first time in my life. I bought cryptocurrency this week. And what a wild
So
ride
Wow.
it has been.
if that doesn't convince our listeners that even Ben is in on it,
Should I
that
explain
means
why?
it's right next to gold.
Yeah, I want you to explain
So
why.
it was several like press releases that got me in on it. So first the first one was a little bit ago when Elon was like, we're going to start using Bitcoin for transactions for Tesla.
Hmm.
So that was cool. That means that was like the first significant push into private industry. Then MasterCard came out, and I think American Express too, but I can't remember. But definitely MasterCard was like, okay, we're going to figure out how to get crypto like integrated in our credit card services, which is a big push also. Finance. Then the city of Miami came out, a local government, but big one, city Miami in Florida, saying we're going to figure out how to like integrate it with the city, like letting people pay taxes and process
Ooh.
fees in the city with Bitcoin. And if they can do it, that will, and if it's successful, that'll spread. And I have a feeling it'll be successful.
Yeah,
Yeah.
because as long as it's thought of as, how many dollars is this worth,
Right.
then
Exactly.
it's just an
Yeah,
investment.
like we're starting to reach a critical threshold where the fiat, the weight of the Bitcoin is starting to have a significant actual value instead of just a meme investment. Because we had
Exactly.
Yeah,
earlier this year
but
the old time big money investors started investing into Bitcoin as a way to diversify away from gold. So we got all
Right.
the old
Because
rich
and that
guys,
that's
and
exactly why I
now
wanted to bring it
it's
up.
like
It's like
it's
gold now.
it's kind of like pushing through all the different facets of industry. So I thought it was a good
And
point.
yeah.
the neat comparison that I think to gold that it has with gold, there's a theoretically set amount of gold in the world, right?
Hmm.
And that's why it has inherent value against inflation. But we're always mining a little bit more gold, right? But there's an eventual limit. And Bitcoin works a similar way,
Hmm.
and they also call it mining Bitcoin, in that there are people mining Bitcoin, which uses like graphics processing units to generate random numbers. But the point is, it pays them out Bitcoin, and that is how new Bitcoin is made.
Hmm.
But the system is inherently made so it exponentially decays how much Bitcoin is mined, and it's every 4 years, it's the rate is cut in half. So eventually, there will be no more Bitcoin mined, and it comes out to something like I forget the number, but there's like a set number that's the goal, and that's going to be how many Bitcoins exist. But we won't reach that state until like 2148 because the rate of mining keeps going
Oh,
down.
well, I was gonna say, what are they gonna use to incentivize people to mine then?
I don't know. Apparently, there will be something that they do after that, but that is 100 plus years in the future.
I kind of see it as how mining techniques are done now because it follows the same process where there's an initial abundancy of the material, so it's
Hmm.
relatively cheap and easy to acquire. As you acquire more and more of it, it becomes harder and harder to get, and therefore more expensive.
Yeah.
And it reaches a certain
Exactly.
threshold where the payment to get the material out is higher than the reward for actually selling the material. So what has happened over time is we get new types of technologies, like so for oil we got fracking, or offshore
Right.
drilling to acquire these larger reserves. So for Bitcoin that would mean some sort of computational breakthrough where some new
Right. What
processor
if
is
you had
developed
quantum mining?
where where you can acquire the smaller amounts for a cheaper price of computing power.
Yeah. Um, but I don't see Bitcoin as a very good currency though, because
Right.
it's
It
that
still has that volatility.
no, not even because of that, because functionally it doesn't work very well as a currency when you compare it to other coins like
Mm.
Ethereum.
Mm.
Hmm.
However, I haven't completely figured out Ethereum yet because you have to use gas to make a transaction.
Whatever gas
Wait,
is.
what?
Yeah, I have no idea.
The like Ethereum network is built in such a way that's supposed to make it work better as a currency. And
Mhm.
there's like an Ethereum backed stable coin that always always equals $1, one US
Mm.
dollar.
Oh,
It's
which
like
one is that?
it's the GUSD, I think.
Oh, yes. I was reading about that.
GUSD always equals $1, but it is an Ethereum backed cryptocurrency. And so using that, it helps make things more manageable, and you can have things like international digital payments that process instantly. Whereas now, to make an international payment of cash or
Hmm.
something goes through a whole process. A bunch of people have to approve transactions, and you get a high cost.
Yeah, I
But
think. I mean, I feel like I still have to um, buy Bitcoin as part of my cryptocurrency portfolio, but I feel the best about Ethereum
Mm.
personally.
yeah, it's kind of like Bitcoin is the one everyone knows about, and so
Yeah,
it has the largest market cap. I think it just crossed like 2 trillion, or no, it just crossed 1
one.
trillion
Yeah.
dollars exist of Bitcoin. And Ethereum is the next biggest one. But
Mm-hmm.
yeah, I think in general, investing in those large cap cryptocurrencies is a pretty good way to have something similar to gold in that you can expect the value to keep increasing over time. Then there'll probably be volatility to deal with it. But if you're holding for a long period of time, and especially if you are rebalancing your portfolio, have a target percentage that's your gold and cryptocurrency and whatever it is, and just rebalance as you go, then I don't know. I've been thinking about that recently, and I really like the way rebalancing works out for your portfolio. We talked a little bit about this before, but it's just that
Yeah.
whole idea like it's automatically, however often you rebalance, buying low and selling high.
Yeah. Yeah, and you don't even have to, as long as you try to stick to those percentages, it kind of takes the whole emotional thing out of it where it's like, well, I think it could go higher.
Exactly.
But
And that's what I've been thinking. And to get to the main chunk of stuff that I wanted to show you guys today,
oh, okay.
um, is about that rebalancing and how you can make it more fun. Because if you just say like, okay, there you go, here's my portfolio, put it in M1 Finance, it rebalances for me automatically, you never look at it again. For some people, that's the best way to do it. For others, we like to micromanage more. But I've been thinking the way of our stock picks where you're picking individual stocks, kind of like we did at the beginning of this year, and we said, all right, here's our 10 stocks this year that we think are going to do well. You could go ahead and look at how much you have invested in those stocks and like what industries they come from, and then get a breakdown of your portfolio. Be like, oh, I put this much in Tesla and NEO, so I'm 20% into electric cars or whatever it is.
Yeah.
But the rebalancing method that I like that makes it more fun is kind of the opposite. Go top down and start with those industries. Decide
Mm.
um, what percentages you want, and then like the next level
Hmm.
down is like if you've chosen a sector, the next level down is the industries, and you can be like, all right, now I know I have 20% information technology, which industries will fill that 20% bucket? And you
Well,
start building your
Joey,
way down.
you can do that in M1 Finance
Oh,
because you can make pies, which can go into a larger pie. So I have
the
five
pies.
different pies for each industry that I want to invest in. And within those pies, there are the stocks.
What kind of pie?
Yeah. Stock
Blueberry,
pie.
So
cherry.
Joey, what graph do you want me to show?
Okay. So Ben, what I want you to bring up is the weighting recommendations graph, the pie chart. So this is the chart of the S&P 500, which industries it's broken down into. And for those listening, what this pie chart looks like is a big slice in information technology. That's almost 30%.
Yeah, it's huge.
The next big ones are healthcare at 13, financials at 10, consumer discretionary is 12. Really little one, energy at
Communications.
2.5.
Oh, wait, did you already say that?
Communications is almost 11%. And what I like about this graph, it's from my Fidelity research thing, um, is it shows you what like analysts are saying you should weight your portfolio. And if you can see the chart, most of them just disagree.
Yeah,
And so
it's too much. Or,
it's right. It's like some say too much, some say too little. Very rarely do all the analysts agree
oh,
on
okay.
one recommendation. Apparently, um, Real estate, though, everyone agrees you should be underweight in real
Mm.
estate. And real estate is only 2.4% to begin with. So I feel like you should just not have any real estate in your
Yeah, because we're
portfolio
like,
right now.
it's pretty consistent. Everybody thinks we're topping out in the real estate
Yeah.
market.
Joey,
So,
you have a lot of real estate in your portfolio.
well, yeah. When I think about it that way, I'm also like, I don't need any more of that. The other thing though is these are real estate companies because this is the
Yeah.
breakdown of S&P 500. And investing in real estate directly compared to real estate companies is going to have different returns. But I went ahead and looked at this chart here and looked at those recommendations and made my own little piece there where
Let's see it.
I'm choosing my choices. Um,
I'm cutting us off in 4 minutes exactly, Joey. So
oh my gosh. Well, all I wanted to tell you mostly about the choices that I made is that in the industrials section,
I like industrials.
there's a lot of industries in industrials. There's like 11 of them or something. But that one I am overweight in, especially for electrical equipment,
Mm.
because that's where you
Wait.
get things like Bloom Energy's servers, you get the hydrogen fuel cell technologies in that sector.
Can you explain what you mean in this sense by overweight and underweight?
So these are the recommendations. So if you're recommending overweight, it means you should have more of this than
Oh,
market average.
Okay,
I
yeah.
see.
that makes sense.
That's
Yeah.
cool.
So, and I like this because I can then start with these percentages and then break down into individual industries, figure out if I want individual stocks to make up those picks,
Mhm.
or if it's something like finance, I don't know anything about banks, so I just would pick an ETF that covers my 10% financials or whatever it is.
Yeah. And I mean, even with that, when I made mine, I found the best or a good way to do it is, you decide your industry, like you say, and then you find maybe the individual stock picks you want for that industry, but then find a good ETF to just round it off.
Right, exactly. Just kind of give you that good base.
Mm-hmm.
Um, and so we only have like what, a minute left. I want to tell you what
No,
my
2 minutes.
We have 2 minutes.
Time moves
Okay.
faster in Minnesota.
this this little chart that Ben is showing you is the performance of the different sectors. The biggest performance over the year has actually been consumer discretionary
Mm.
now. It's
Whoa.
been
Well, what about
oh
information?
no, I'm sorry. IT is still beating it. Yeah, IT has always been on top for the past like 10 years. But consumer discretionary is coming up
Dang.
there. And I think it's because Tesla is involved in that one.
That's true.
Oh, they
Yeah.
are?
Yeah, they're consumer discretionary. Because it's at your discretion to buy a luxury car. It's not like a consumer staple like bread.
Oh, consumer state. Oh. Oh, I
It's
see.
like luxury goods and staples.
Yeah.
So yeah,
But-
and I heard something. Wait, Joe, do you have more stuff to say?
I have one more thing to say.
Okay, do that. Do that.
I just wanted to share my overall pie chart. The biggest zoomed out pie chart is
Okay,
looking
do
at the
it.
types of things you can have is US stocks, I have 70%, international stocks 12%, emerging markets 6%, real estate 0% because I already have a house and so I don't want to
Yeah.
invest any more in real estate. Gold at 5% and crypto at 5%.
You're already
Talked
at 5% crypto?
These are my targets. I need to rebalance to hit these.
Oh, okay.
I don't want any bonds because I'm not about to retire. And I've been thinking I want to put 2% into like art. I'm thinking I'm going to put 1% maybe into VinoVest.
Yeah.
Why not wine?
Dude, I
Joey?
love that. Art.
Well, I classify wine under
All right,
art.
real quick. I think one of these episodes coming up, we should do like a obscure investments episode where we talk about some
Alternative investments?
alternatives.
Ben, we don't have to stop at exactly
No, we have to
20
stop at
minutes. We can keep
exactly
going.
20 minutes.
Wait, but we have to talk about garlic bread investing.
Ben, we still have time.
Okay,
We
all
can
right,
just keep it
all
going.
right.
Oh, no, cut it off. Cut it.
All right, if you made it this far in the video, let us know in the comment section down below if you like the left armrest or the right armrest when you're in a movie theater. Thanks, bye.